It is time to build a Robinhood portfolio, but where do I start? Hello and welcome back to the channel. Today we're going to be talking about my Robinhood portfolio. But before we get into that, let me make a few things clear. Number one, I'm not a financial advisor. So if you're going to invest in the stock market, or really if you're going to invest in anything, make sure you do your own due diligence, make sure you're doing your own research, make sure you ask the right people, professionals, people that are licensed, so that you can make the best decision for you. Also, I am not the greatest investor, and because of that, I am investing in things that I think are more stable, so that I can set myself up for financial freedom in the future. So with that being said, like I said, I'm not a financial advisor, so do what is best for you. So when I first started my Robinhood account, I decided that I wanted to be a dividend investor. Well, what is a dividend? A dividend is a sum of money paid regularly by a company to its shareholders out of its profits. Plain and simple. So if you hold shares of different companies that pay dividends, a percentage of that, a small percentage of that will be paid out to you as an investor within that company, a shareholder within that company. When I first started investing, this was, in my mind, a great way to build a lot of passive income and set myself up financially to do basically whatever I want, to make sure that I had cash coming in no matter what happened. And I do believe it's a great way to invest. However, for me, it felt a little bit too, hands-on. And I just don't want to spend and commit the amount of time that is needed in order to invest into dividend stocks properly. Now, there are a number of name brands that you can invest in, businesses that you can invest in, that you may or may not have to do as much research on because they are well known and they're not going to be going anywhere for at least the foreseeable future. However, you never know. And for me, that just wasn't good enough and caused me a little bit of stress. And honestly, my wife and I are not strapped for cash at the moment. Obviously, we could be doing better, but we're in an okay place. We budget, we don't spend a whole lot of money, and we're not living paycheck to paycheck. And so having that upfront monthly or quarterly cash is not absolutely needed at this very moment. And so for me, I wanted to figure out, is there a better way of investing? So I started looking on YouTube and just taking in a lot of information from different YouTube channels about different ways to invest in different places to park their money to help build their net worth, build their cash flow without taking a whole ton of risk. And I think it's well known that if you're buying an individual stock versus buying a mutual fund or an ETF, an index fund, the individual stock is going to be more risky, despite you may be, investing in like Home Depot or something like that. You're putting all your eggs in one basket, and everyone knows that if you want to invest properly, it's better to spread out and diversify so that you can be quote unquote protected. Now, I know there are investors out there that think that's absolutely stupid, but those investors are individuals that are spending hours and hours and hours each and every day doing their own research, reading, doing their due diligence, and this is what they do for a living. For someone who is just an everyday, ordinary investor like me, I don't want to commit that kind of time. And so I've decided that I'm going to go with some index funds, some ETFs, and more specifically, I'm going to invest my money into VOO and VTI. Well, what are those? VOO and VTI are both index funds within Vanguard. VOO stands for Vanguard 500 Index Fund, and VTI stands for Vanguard Total Stock Market Index Fund. So I figured the best way to showcase what VOO and VTI are, I decided I would go over to the Vanguard website and just pull up both of the ETFs and give you an overview of what they are. So Vanguard S&P 500 ETF, also known as VOO. Product summary: invest in stocks in the S&P 500 index representing 500 of the largest US companies. Goal is to closely track the index return, which is considered a gauge of overall US stock returns. Offers high potential for investment growth. Share value rises and falls more sharply than that of funds holding bonds. More appropriate for long-term goals where your money's growth is essential. I'm a long-term investor. It's one of the reasons why I invest in real estate, things like Fundrise, personal real estate, and now, like I said, getting into ETFs. As I said earlier in the video, I am not super strapped for cash right now. The time frame for which my wife and I want to be financially free is 5 to 10 years, which we're going to be doing through personal real estate, and then have this in the back end working for us using some of the rental income that we're getting to help boost this up over time. Etf Facts, asset class, domestic stock, general, category, large blend. The ticker symbol is VOO. The expense ratio. Now this is a big thing for me and most investors. Your expense ratio, especially when it comes to ETFs and index funds, you want that to be low. So this is really, really low, 0.03, meaning for every $100 that I invest within this ETF, I will be paying them $3. You want that to stay low. I've seen some as high as like 1. I'm sure there's some way higher than that, and then there's some in between. It doesn't seem like a lot when you're playing with small amounts of money, but when you start adding zeros to the end of your account, that zero starts adding to the amount of dollars. So right now, it's $100, it's $3, $1,000 is going to be $30, $10,000 is going to be $300. You bump this number up to 1, and all of a sudden you're playing with some big numbers and you're missing out on a lot of money. So for me, the expense ratio is super important, and both of these ETFs have a low expense ratio. Now, this is just the hypothetical growth of $10,000. If you invested $10,000 in 2011, as of today in 2020, it would be, or as of 10/31/2020, it would be worth about $44,783. That's terrific growth, especially in a 10-year period, and that's not adding any more money consistently. So there's great growth typically within this ETF. You are diversified within this ETF, and you don't have to check it all the time, every day, doing constant research. You can check up on it periodically and know that you're probably doing okay. If we jump over to VTI, Vanguard Total Stock Market ETF. So this VOO is the top 500 companies in the US. This is a total stock market ETF, so it covers everything. I think the difference here is, I think it said it, so number of stocks within VOO is 510. The total number of stocks within VTI is 4,025. Okay, so just kind of keeping that in mind. There's a whole lot more room for, I think, volatility with VTI, but they both generally act about the same. Product summary: seeks to track the performance of the CRSP US Total Stock Market Index. Large, mid, and small cap equity diversified across growth and value styles. Employs a passively managed index sampling strategy. The fund remains fully invested. Low expenses minimize net tracking error. Asset class: domestic stock, general. Category: large blend. Ticker symbol: VTI. Expense ratio: 0.03, low as well. And here is, if you put $10,000 in 2011 as of 10/31/2020, you would be roughly at $44,462.99. So about a $300 difference there. But like I said, relatively the same and pretty similar in terms of the way that they act. They're mimicking the market. Obviously VOO, the top 500, Vanguard or VTI, the entire market. But just a great way of parking your money and letting it work for you without necessarily having to stress and check on it day to day. If we jump over to Robinhood, you can see that I have about a $200 account currently. I have $5 into VNQ, which is Vanguard's REIT, and then I have about $190 in BRPM, which is a SPAC that just picked up a company named Phase. If you know nothing about them, go do your own research. I'm not going to explain in this video. That has nothing to do with this video, but I'm going to leave that money there. I'm not going to be touching either one of these stocks. I'm leaving it alone. And then I have already set up to have a reoccurring investment, as you can, well, it's not going now. Why not? I guess because the reoccurring investments don't start until Wednesday. But on Wednesday of this week, I will be having $5 going into VOO and $5 going into VTI. Now, I want to do a weekly update just to showcase you guys kind of what's going on. Okay, so these are my past reoccurring investments that I did when I was first starting out. And as you can see in the past, I even did VOO and VTI. I currently have those turned on now. I will update you guys, not this week because I'll let that money sit in there, but next week whenever the money has been in there for a week. And just showcase what is going on, what is happening within the market. If we go over to VOO really quickly here, we can check out what has happened over the past 5 years. I mean, it's just trending upward. Obviously, we have small corrections without jumping down, but generally speaking, it is going up. This happened at the beginning of COVID, and then it has blown past that. Now, I'm assuming there's going to be some kind of correction at some point between now and 10 years from now, and who knows what that is going to look like. But the thing is it's trending upwards, and you see this one. If we go over to VTI really quickly, they don't look much different. They look practically the same. And for me, that is incredibly important. When it comes to investing, I want to be consistent. I want consistent cash flow from my rental properties. I want to consistently have my stock market, my Robinhood portfolio, my Roth IRA. I want that continuously growing over time. And I don't want to have to worry about the ups and downs of the market day to day. I want to be able to check on it maybe once a month or once a week or something like that, and know that my money is doing what it's supposed to do, which is grow over time and build me the type of lifestyle that I want to live alongside my wife and our kids. Thing is, a lot of people get into investing or really not investing but trading, and I've fallen into that hole as well, where I'm on here day to day, or every few days I'm like buying this stock and then trading it a few days later. And the thing is, I'm just not good at it. I don't have the patience for it. I'm not good at it, and it causes me a lot of stress because I've lost not a ton of money, but I've lost money, and I don't want to continue doing that. And so for me, I know this is the best way that I can go about building the type of wealth that I want and need to make sure that my family is taken care of for the rest of our lives. Not only my wife and I, but our son, his kids, generationally speaking. So that's everything. That's what I'm thinking. That's where my head is. Let me know what you're investing in. Is this something that interests you? Are you more of a day trading / swing trading individual? I'm very much focused on long-term investing, and I'm okay with letting my money sit there for 10, 15, 20, 30 years and build over time. Having said that, let me know what you do, what you like. You're more real estate? Are you more stock market? Are you a mix of the two? Because I'm sitting in the middle. My name is Oscar. Thank you so much for watching, and I'll see you guys in the next video.